To Okay, hello everyone. Today is my first trade on January. I'm using paper trading currently because why? I don't want to throw my money again on prop firm. I will try my money again on prop firm, but also it's currently I'm trying to apply my new strategy that I just made, and yeah, that's why I want to, as I said on the last video, I want to trade with the strategy that I made in a whole month on January, and then on the next month, February, I'm going to buy another funded account again, and then trade it with the strategy that I made right now. Which also the trade that I took now is with my new strategy. So yeah, I think I should get credit to PB Black also, to PB Black, because I think it's like probably like his strategy, but I just find it my own way to just make it way more easier to for myself. But maybe the way that I make it easier for myself could be also helpful for other people. So yeah, basically from what from my explanation about the strategy is the first step. Basically, go to 4 hour and then looking for overall bias. Do we bearish? Do we bullish? And then if we already decide do we actually bearish, like for today, okay, I decide today is bearish. And then what I need to do? For example, this is for the bullish one. First step, for example, let's not think about our current trend. Just for example one. Okay, currently maybe first step. Okay, market want to open. Look on the bigger time frame, 4 hour. Do we bullish? Do we bearish? Okay, we actually bullish. So if we want to bullish, step two, we are looking at 1 hour, 30 minutes, or 15-minute look for a key level. And what we can say key level is the one that key level that I use here is fair value gap, session high and low, and then yeah, I think basically that. Oh no. Session high and low, fair value gap, and then intermediate high, intermediate low. I think you all probably already know fair value gap. This is, for example, from an entry from fair value gap, right? So basically, we are look at look for a fair value gap, whatever is that fair value gap that's already made or fair value gap that's going to be made after we are market open, right? For example, this is the gap, right? Market open, and then we are doing this move. This, for example, when the 5 minute gap was happening after market open. Usually, when I use this is when this when the market is not moving to the available key level that's already made before market open. If that's the case, then that's all right. We are going to just wait for price to form a 5 value gap, bullish gap that was going to be synchronized with our overall bias. For example, this is bullish. For example, I was expecting price going to go. For example, there is maybe like this. This is market open. For example, oh my god, I need to move this shit. Okay, for example, like this. So, for example, we have this London low. And if we are trying to, if we want to look for price to go higher, we are expecting price to go down, sweep this key level, and then after that, we are going to look at that manipulation lag that was going into this key level. And then, for example, if this actually going to down here, I'm looking at this manipulation lag and look for the highest time frame fair value gap that was available there. And maximum is 5 minutes. So if you see 5 minute fair gap, just don't care about that. Just look for the highest time on 5 minute. If there's fair gap on 5 minute, look for 3 minutes. If you don't have any trading view pro like me, then use 3 minutes after that, because we cannot use 2 minutes. It's pro version only. And then after that, sorry, and then after that, yeah, look for inverse in that gap, and then if already inverse, just enter off that. But in this case, what is happening here basically, as you all see here, uh now we back to fair value gap example, right? For example, okay, we are expecting uh price might be on the open. We are going to just go down here and then sweep this, manipulate into this key level, which is our session high and low. In this case, it's going to be London low. Okay, New York session open. We are going up, and then after that, we are unfortunately forming some 5 minute gap, and we fill the gap, and we see a decent rejection of it. Right? For example, we go here, and then we're actually going higher, and then we can look here after we fill the gap. We scale to 5 minute. If we can see 5 minute for fill gap, then we are waiting for price to inverse this gap. Okay. Now this also, for example, if we're actually going to move down again, but we're still inside the gap, and then we actually also have a 5 minute gap or 3 minutes or 1 minute gap, then inverse it, then we can trade off that and then enter. For example, the entry is going to be inverse it, and then yeah, stop loss is going to be at the swing low, and then yeah, we can target our other key level that's haven't been taken yet. For example, we have London high available, or maybe uh relative equal high or equal high. Like yeah, for example. Yep, that's for the entry model, and this is also called intermediate. What is it called? Uh, intermediate low. This is also can be our key level. This I'm going to give your example. What I mean by that, that can be used as our key level too. So, for example, we have a fair value gap in here, right? But it's actually already been filled somehow before market open, and then market open is here. And then this we can also use this as intermediate low. What does that mean? We are expecting price to going to retest this and then sweep the first candle that fill the gap in the for the first time, even though it's on doesn't matter if it's actually on before market open, we sweep it, and then we can look for biggest time frame inverse gap after we sweep that. That could be also our entry. But for this one, I think this video is going to be too long for me talking about the strategy itself. It's not about the strategy, my bad. Then basically, I hope you understand about it. So, what is my entry base of today? So, go to 4 hour. Just basically saying before there's this candle, this big candle to the upside, which looks like it's not even bearish anymore. But yeah, just my first identification was it's bearish. Like first, just look at this candle. Just focus on what we currently just immediately can see. Right, we break structure in we disrespecting bearish bullish gap. Sorry, we disrespecting bullish gap. It's already inverse in this candle though. But yeah, we're just in bearish gap. We are really, really strong to the downside here. So I was expecting, okay, we are bearish. And commit to that decision. Don't fucking think about, but I think that's gonna be like that something like that. No, just focus on one. Okay, this is bearish, and then okay, if I want to be bearish, I want price manipulation to the upside because I'm expecting we manipulate first to the upside before actually going to our actual direction to the downside, right? So we look for that. And then here for example, I was expecting price to go into this London high, right? We are expecting price to go to this London high, and then after that we are going to reverse after that, and then looking for the inverse gap. But here we also already have this gap, right? We already have this gap that could pretty much get filled, and also I marked this little small rectangle is from 15 minutes here, 15-minute gap. And yeah, I marked that shot to be filled, and it's actually got filled. And then after that, this is our manipulation leg to the upside. The move that fill the gap or doing the manipulation, right? This is the 15-minute gap. I'm expecting price to manipulate first into the upside, which it does go to the upside. 5 minutes after market open, go to the upside, having a decent rejection here, and then just like that, and in that way we also form another candle, which it after that we are making us to be forming this bullish gap, right? And then we can wait for this candle to be inverse, and wait for the candle to get inverse. We have this bearish candle, it's close and it's inverse the gap, and enter after that. And as you all can see, okay, sorry, whoa. Okay, so I can see here we have some this big wick, almost not really crazy, like almost to the stop loss, but yeah, it's like there's move up here on the trading when I'm trading it. That's actually kind of scary. I was thinking that I'm just going to go immediately stop that, but after that we are just sell off to our direction. Where's my target? To the station low, which in this case is Asian low because this low is haven't been taken out yet. So that's our key level on the same direction as our trade that we can use as our target. And that's all. And I made around in paper trading 1.915K. Yeah, I hope it's fucking real money though. Not the paper trading, but yeah, I mean this is the trade and it really works as you all see here. And yeah, we'll see on other days. We'll see tomorrow how it's going to be. We'll see with the strategy. I mean, I already backtested for 3 months, and then I don't really want to like really backtest it like until my eye bleed out because I think that's not also a good thing for a day for a day trader to backtest too much. Sometimes you just make 1 month or or several months that actually using a simple strategy that you are working for you, and then yeah, after that take a rest and try to trade it in paper account. I mean, it doesn't matter. You can the reason of this paper trading is so you can get into the real market without risking your actual money, right? And then you also for training your strategy that you are trying to apply and you want to see it how you can identify it in the real life market condition. But one thing that probably can be what is it called? One thing that can be one thing that paper trading can make us feel is the feeling that we actually are actually losing our own money, our real money. That's one thing. But in this case, we are just trying to uh, focus on the strategy that we are using and trying to apply it in real life market condition and uh, train us to identify how we can how can we identifying the strategy itself that we are using. So yeah, this is today's the trade and yeah, that's all. So thank you guys for watching. If you actually want to really understand about the strategy, you can just comment. You don't need to fucking pay me or anything. It's really simple strategy. So yeah, see you guys in the next trade that I going to take in this new year. Bye.